Hi, Jim Robinson with ProfitTraining.com, the premium daily commodity newsletter. We're going to look at a few of the grains here. This is March soybeans. Now, if we put a Fibonacci retracement, okay, now here's the last bull swing from here to here. So if we put a Fibonacci retracement, we click the low, click the high, and then 0.618 is 964. Basically, it's coming right into the 0.618 retracement level right now. Now, so we'll just remember about 960 there is what we're looking for in the Fibonacci retracement. So we'll take that off, and that's for beans. Now this software has another indicator that if you click this low, it will tell you where it thinks the next low is going to come in at, and it's done by momentum and all that other, Fibonacci numbers, and just for market action in general, that's the way it gives us this number. So if we click on this low, it's projecting a low to come in soybeans from 112 to 119 and about 950 a bushel. So basically we're just looking for a low around 950 to 960. I think once beans do come down here, and if they make a low, there's no guarantee that this is going to be right. This is just an indicator to help us see what happens. But if beans do find a low here and start basing, then this is where we'll be looking for our buy signal. So I think that's a pretty good I think this is pretty good or pretty close to what's going to happen in beans. It's gonna be like an A, B, C correction down into about 950. It's going to be the low, and then it'll probably base, and it'll probably start back up. Now, one thing about the grains that's interesting is January and February is usually the time for a seasonal low. So this weakness coming into this time of year is nothing unusual, and it's probably, I'm still bullish the grains. I think this is just part of the cycle coming in, the selling that comes in this time of year. Okay, we'll try to take a quick look at wheat here. We'll do the same thing we did on the last chart. This is March wheat. We'll do the Fibonacci retracement, this low to this high, and right now the 0.618 is right at the last low, so this probably will come down here and make a low right in this area. Now again, this Fibonacci is just an area to look for support, so it could come lower, and I think I put the make or break on here earlier. So we're going to take the Fibonacci off. Fibonacci's saying about the low is going to come in with these other lows. So this is a strong support area right now. That's good information to have. Right at 515 is strong support. Okay, now we'll take the Fibonacci off, and we'll put on this make or break from this last low, and it's down a little bit lower here, but this is not out of the question by any means. Well, what could happen here is wheat could come down in here, and then it could maybe rally in and then come into this, but it's calling for low in wheat 128 and up to February 9th. So right in that area, basically within the next couple weeks, and it's looking for a low about 491. Up here we're looking at 515, so that's a pretty good general area. Basically around 5 to 520 for a low in wheat, and so if wheat gets over here, we'll be looking to buy. I think wheat's got more downside to go, so I do agree with what the software is projecting on that. Now we'll look at corn. I think we'll look at oats a different day, because the reason I'm always in a hurry on these videos is because you can only load so long up to YouTube, and that's where I'm doing these right now. When I learn how to do them a little better, maybe I'll make some longer videos. But anyway, this is March corn, and again, this yesterday looked like such a collapse, which it was. But if you look at the big picture, the whole big picture things, I mean, it's made a nice run up here, and it's going to correct, and that's just basically what it's doing. So we'll put the Fibonacci on this low, on that high, and it's calling for, we always look for about a 0.618 correction. I pretty much always look, the correction to look for is 0.50 or 0.618. I just pretty much always go for 0.618, because if it's a real correction, it usually gets down there. You know, sure, sometimes it'll come in at 0.50, or sometimes it'll come in, if the market's just barely correcting, it might come in at 0.382. Like this was kind of part of the bull swing higher, so that was just more like a 0.382 correction. But usually when they're gonna make a correction, when they're gonna make a big solid correction, it's 0.618. And here's something interesting about this. This 0.618 is at 360, so we'll keep that number in mind. And if we go straight back over here, that Fibonacci retracement comes right in where this market gapped up, so that's going to be strong support. So I think this is a good prediction for corn to find a low around the 360 area. And that's by the Fibonacci tool. Now we'll take that tool off there, the Fibonacci, and we'll use this make or break again, because this is pretty good too. And this just helps kind of confirm and give you a little bigger area if sometimes it might need a little bigger area. But 360 we're looking for. Now we'll click the make or break on this low, and that comes in right about 367 for the low. So 360 to 367, and it's saying January 19th through January 28th. So, and again, that might be the initial low coming in, and then it might bounce and make a double bottom. But I think right here is going to be strong support for corn, and we'll definitely be looking to buy. We're just going to kind of stay out right now. This is kind of a good time of year to stay out and be very cautious of the grains. But once February is over with, they usually start moving pretty good because the weather scares, the planting seasons, if it looks like we're getting too much rain or not enough rain, and the time of year the grains start moving is coming up, so we'll be keeping a close eye on the grains. So thanks for watching my videos. I guess it's only one video this time, but thanks for watching all my videos the other time. And Jim Robinson, ProfitTrading.com.